Okay, let's go ahead and start booking invoices for June. This time we will not use the drag and drop of PDFs function. We will still use the accounts payable. We will just want to demonstrate how it goes if you go through add bill interface. So let's get going with that. Okay, first we have our food traders, right? So again, we're going to go through add bill. All right, so vendor. Okay, let's see, bill date. Bill date would be the invoice date. Okay, due date, right now it sets to net 10, which is correct. Okay, bill number, we're going to enter the invoice number. Okay, and then we have food purchases. Again, let's make sure the amount is correct because QuickBooks pre-fills it for us. So here it is. The new amount is $1,416.84. So let's reflect that. Okay, let's make sure we update the bill number in the description. Okay, here we are, we're ready to book. So what's happening? Let's make sure we understand. Well, one thing for sure, we know that our expenses when food purchases are going up. Expenses go up when debited. What else is happening? Well, we're booking it into accounts payable, right? So our accounts payable, 2100, is going up as well. And being a liability, it goes up when it is credited. So here we are, right? This amount that we entered right here, it is a debit to account 6200, and it is a credit to account 2100, even though, again, it's not depicted here, it's automatically connected to it because we're booking it as a bill. Very important to know and remember that. All right, so save. Okay, and now, so this one's been saved, and now we can go ahead and pay bills, right? So when we're booking through accounts payable, we're doing it in 2 steps. So pay bill, okay, so here it is, right? Food traders. Again, this one is paid with a credit card, right? So make sure it's reflected correctly right here, credit card. Payment date right here, 6/12. All right, so food traders, all right. Payment amount, correct, right? Okay, so here we are. Once we book it, what's going to happen, right? Well, we already touched the expense account, so it will not be affected by this new entry, right? But what will happen is our accounts payable will go down, all right? That liability will be reduced, so this will be kind of a wash. And our credit card liability will go up. Okay, so you can see this new entry is right here. So once we remove it, this is what we will book, right? So this amount right here will be a credit to account 21100 and a debit to account 2100. It will reduce the accounts payable, it will reduce one liability and increase another liability. Makes sense, right? We're paying one liability with the other. Save and close. All right. Next one, again, we have another credit card bill, right? So let's again go through 2-step process, right? So first we're going to add the bill. Okay, vendor to go packs. Here it is. Yes, terms. Okay, bill date. Okay, bill number. Make sure we enter the updated one. Okay, and then we can copy and paste it into the other fields. Okay, so here we have restaurant supplies. Okay, so here it is. Let's just update the amount. Here it is, right? 195.45. Everything appears to be correct. So again, what's happening here? Well, our restaurant supplies, right, are going up. That expense is going up. So to go up, it has to be debited. All right. What else is going on? What else is going on? Well, our accounts payable account is going up as well, right? We owe money to to-go packs, right? So here it is. This amount right here is a debit to account 6100, and it is a credit to account 2100, even though, again, it's not showing up here, it is there. And it's important to remember that by booking this transaction, it is still part of the double entry accounting, and even though we're entering it once, it is a debit to account 6100, and it is a credit to accounts payable account. In our case, it's 2100. Okay, let's go ahead and save it. Okay, now we will pay it, right? So here it is. Credit card is selected. The date we paid is 6/14. Okay. Credit card, we're paying it with a credit card, correct? All right. Payment, 195.45, correct? Okay, so what's happening? Well, we will reduce our accounts payable balance, but we will increase another liability, in this case, our credit card. All right, so here it is. If we book bypassing pay bill and say we book it through expense or general journal, we can bypass this step right here, right? We can just remove it, and what will happen is our expenses will go up, our liability with the credit card will go up as well. However, we're booking it through accounts payable, so there is this intermediary step where we book it into accounts payable, it goes up, and then when we pay it with our credit card, accounts payable is reduced. So let's continue. Here it is, right? This amount that we enter right here will be a credit to account 2100, and it will be debit to account 2100, even though, again, as we showed before, accounts payable is not reflected on this interface. It is impacted by this interface. So let's go ahead and book it. Okay, next one is cleaning supplies. So again, let's add the bill. Okay. Bill date 6/3/2020. All right, bill number. Here it is. Let's make sure we copy and paste it. Okay, and we update the amount. Okay, so here we are, right? What is being impacted? Again, we know that expenses are going up. Expenses go up when debited. What else is happening? Well, we're booking it through the bill module, so our accounts payable is impacted. So account 2100 is increased through debits because it's a liability. So right now, as a result of this transaction, we owe money to Clean Depot Inc. Right? So again, let's make sure dates are correct. Everything is correct. All right, account is correct. So this amount right here, $228.27, it is a debit to account 6400, and it is a credit to account 2100. Okay, let's now go ahead and pay it. This one we pay with check, right? So we're gonna pick our bank account. All right, the date of the payment, check number. Okay, amount is correct. Okay, so what's happening here? We're going to reduce the balance on our accounts payable, and being a liability, it's reduced through debit. What else is happening? We will reduce the balance on our bank account, because once the check clears, it will reduce our bank account balance, and bank account is an asset, and assets are reduced through credits. So here it is, right? This amount right here, it is a credit to account 11100, and it is a debit to account 2100. Again, remember, when we pay bills, we're not impacting the expense account. We did that when we booked the bill. Once we settle the liability, at that point, we're not impacting the expense account. Remember that. Again, once we click and book it, what will happen? This amount will become a credit to account 11100, and it will be a debit to account 2100. Okay, let's continue. We have one more credit card. Okay, the bill date is 6/7. Alright, bill amount 478,378. Okay, good. It's drink purchases. Let's make sure we update the amount. Here it is, right? So what's happening? Our expenses are going up. Expenses go up when debited. Okay, what else is happening? We're booking it through accounts payable. So our liability account, accounts payable, is going up, and they go up, liabilities go up when they're credited. So here it is, this amount, 495.89, right? It is a debit to account 6300, and it is a credit to account 2100. 2100 again is not on this interface, but it is connected to this interface, and it will be impacted because we're booking it through the bill module, right? So again, let's go ahead and book it. And now we will pay this bill, right? Again, make sure you select the payment correctly. In this case, it's our credit card payment date. All right, amount is correct. Okay, so what's happening? We are reducing our accounts payable balance, and accounts payable is a liability. It's reduced through debits. What else is happening? Well, we're paying it with our credit card. Credit card is another liability, so that one goes up, right? One liability goes up, the other goes down. In this case, liability goes up when it is credited, and so this amount is a credit to account 21,100. So here it is. Once we book it, right, this amount will be a credit to account 21,100, and it will be a debit to account 2,100, right? This liability will be reduced, this liability will be increased. And again, this is from previous one, just to illustrate, this is the transaction that we will book. Okay, we have another bill that we will pay, utilities bill. This one is paid with check. So again, let's add this bill. Okay, bill date. Alright, bill number. So we'll make sure that that's reflected in our notes. Okay, expense account utilities, make sure we update the amount. Okay, so you know by now, but let's follow along, right? Expenses go up when debited. Liabilities, in this case, our accounts payable, goes up when credited. Here it is. Once we book it, right, this amount is a debit to account 63,100 and a credit to account 2,100. All right, let's go ahead and pay it. Again, we're paying it with a check, so make sure that that's selected. All right, payment date 6/9, check 10/16. All right, here it is, amount is correct. So once we book it, we will reduce our accounts payable balance, and we will reduce our bank account balance. Okay, so here it is, right? This is the previous entry, just to illustrate that in this entry, once we book it, we're not touching our expense account. You know, some people make that mistake. Why we're not impacting our expense account? Well, we did it when we booked the bill. Now we're paying the bill, so once we pay the bill, expenses are not impacted. So this is what we're actually booking. Okay, this amount becomes a credit to account 11,100, and it is a debit to account 2,100. We're reducing the liability, accounts payable, and we're reducing accounts, our bank account balance right here. Okay, and we have one more bill. All right, let's add this one. Again, remember when we add bills, we're not required to indicate the payment method, right? Because we pay it later, and that's when we indicate, is it a check, is it a credit card? At this point, it just goes into accounts payable and impact our expenses, or if we're buying assets. Okay, let's go ahead and book it. So 6-2. All right, let's see, bill number. Here it is. Now this one impacts several categories of expense accounts, so let's get on it. So lease, we have our lease, rent, okay, so that one is 1,000. What else we have? We have insurance, all right, that one is 150. What else we have? We have dues and subscriptions, that's our registration fees and such. What else we have? We have maintenance. Again, make sure we update the amount. Maintenance is at 80. And what else we have? We have our advertising, right? Because we're paying for that artwork they put on our food truck, but we're paying it over time. Okay, so here it is, and the amount, 1,375, matches to the total on our bill, right? So we're impacting multiple expense accounts. Let's make sure we fully understand what's going on here. Well, let's get one thing out of the way, right? Our accounts payable balance will go up. Accounts payable is a liability. It goes up when it is credited. All right. And then we have multiple expense accounts that will go up, and expenses go up when debited, and it's perfect. It will offset this credit entry, right? And debits and credits will equal. That's the key in double entry accounts. Okay. All right. 6-400 and 6-100. All right. So our debits and credits are in balance, right? All of these expense accounts will go up when debited. Here they are. So each one of these amounts is a debit to the corresponding expense account, right? And this amount is a credit to account 2100. Again, it's not showing up, but it's there. Trust me. Otherwise, it wouldn't work. So here we are. Let's go ahead and save it. Okay, and now we're going to pay this bill. Okay, here it is. We're going to pay it with our bank account. All right. Check 1018. Make sure the check is correct. Okay, big lease. Okay, here it is. Once we pay it, what will happen? You already know. But anyway, let's follow along. Well, accounts payable balance will be reduced, right? So this and this will become a wash. What else will happen? Well, our bank account balance will be impacted as well. It will be reduced by that amount because once the check clears, right? Oops. Here we are. Oops. Okay, here we are. So you see debits and credits are in balance, always have to be in balance, right? So you see that this and this is a wash because credit here and a debit here, you pretty much could take it out. But because we're using accounts payable module, we are including this step, right? So this is just previous entries that we booked, clear. Okay, so this is what we're actually booking right now. So this amount right here, it is a credit to account 11,100, and it's an asset, so it's going to be reduced. And it is a debit to account 2,100. That's accounts payable account that will also be reduced because we're paying off the liability with check 1018. All right, so that concludes this one. And we're done booking invoices for June. Okay, let's go ahead and book our credit card receipts. All right, here we are, we're in June, so that one we do through our expense module, right? Okay, gas station, credit card selected, yes, good. Okay, credit card. Okay, what's the date on that? 6/10. good. Okay, that's our fuel. Let's make sure we update the amount. Alright, reference number. So here it is. What's happening? Well, we know that we're paying with credit card, so our credit card balance will go up, and it goes up when it is credited. What else is happening? Well, our expenses on fuel go up. So account 63,200 will be debited because expenses go up when debited. So here it is, right? This amount right here, it is a debit to account 63,200 and it is a credit to account 21,100. Okay, we have another one that we're going to book. All right, this one is 625. All right. All right, let's make sure we update the amount. Okay, here it is. Again, same as the before. Let's just switch it up a little. So expenses going up, expenses go up when debited, we know that much. What else is happening? Well, we're paying with a credit card, so liability goes up, and liabilities go up when credited. Okay, here it is, debits and credits are in balance. This amount right here, it is a debit to account 63,200, and this amount right here is a credit to account 21,100. Okay. Okay, we have a receipt from our mobile provider. All right. Okay. Again, paying with a credit card, payment date 6/15. Okay, this one stays the same. Telephone expense, let's just update the amount. Oh, it's the same. Excellent. So, telephone expenses go up, 62,600. Has to be debited. Okay, credit card balance will increase. It's a liabilities. Liabilities go up when credited. So here it is. Debits and credits are in balance, right? This amount right here is a debit to account 62,600, and it is a credit to account 21,100. Okay. Next, we have our return, right? So we're going to do return. So we have, it's called credit card credit. All right, so here it is. In this case, the date is 6/15. Okay, reference 748 QE18. All right, good. That's to reference our order. All right, so in this case, we're returning our DeCre painting kits that we purchased for 4th of July. We, I believe, purchased some extra ones that we didn't end up using, so we can return them and get our money back. So that was our advertising and promotion expense. So we will reduce that expense, right, because we're returning, so we're not incurring it. All right, so here it is. So what's happening in this case? This is a slightly different interface, right? It's not the one that we had before, not the expense. It's credit card credit, all right? So again, even though it is a little bit misleading from standpoint of debits and credits of bookkeeping, that's okay, as long as we know what it does. What's happening? We're returning, again, DeCre paint kits, and therefore our expenses on advertising and promotion will be reduced. Expenses are reduced when credited, right? So let's go ahead and do that. What else is happening? Well, once we return it, the vendor, the online market, will refund our credit card balance, right, to our credit card company. They will issue a refund, and our liability will be reduced by $54.38, right, by the amount of that refund. So our liability, account 21,100, credit card liability will be reduced. Liabilities are reduced when debited. here it is. Debits and credits are in balance. This amount right here in this case is a credit to account 62,100, and this amount right here is a debit to account 21,100. Again, remember, it's a different interface than the expense, and that's what allows us to essentially book that refund. So again, let's go ahead and book it. Okay. Next, we have our payment, right? This one we do slightly differently. Also, let's take a quick look. No, we wouldn't be able to book it. No, we could. Actually, we can book our payment. Unlike, previously we booked it through transfer, we can book it through this credit card credit window. Because again, we know our debits and credits, so let's go ahead and do it. All right. Reference. Okay, and then updated the amount. What's happening here? Well, we're paying down our credit card balance from our bank account, right? So we know that our bank account balance will be reduced. We know that bank account is an asset, and assets are reduced when credited. What else we know? Well, once we pay that amount, our balance, our liability balance with the credit card will be reduced as well. And liabilities are reduced when debited. So here it is. All right, so debits and credits are in balance. This amount right here, right? It is a credit to account 11,100, and it is a debit to account 21,100. All right, and we're done booking receipts and credit card transactions for June.